So have you ever found yourself trading against the market, against the conditions, just to find yourself getting smoked, chewed up, and spit out over and over, right? Have you ever had the improper belief that led you to believe sellers must defend a supply zone, buyers must defend a demand zone, right? So today in this lesson, I really want to break down, flesh out the problem with these irrational, unlogical belief systems that we have and why they impact our results, right? So basically when I started as a trader, right, and I think a lot of traders go through this, is you kind of go through the phase where you're brought into the market and you have all this overwhelming information, right, and at the same time it seems very easy, right? It seems, oh, listen, you know, I get to create my own rules, I get to create what I want to do, I get to be creative, and I just need to buy low and sell high, right? That's a market principle, right? The only way to make money in this market is to buy when the price is low and sell when the price is high, right? So that's indisputable, right? No one can dispute that. This is a principle. This is a precept. This is a governing truth, right? So what we tend to take from that information is we must predict the highs and predict the lows. And that cannot be any further from the truth, right? So once again, the market is an environment, right, that's made up of traders agreeing on a price, right? And then when two traders agree on a price, right, then this causes price action, right? Whether or not those buyers are aggressive or those sellers are aggressive, right, is, you know, what then causes price to fluctuate in a manner that presents opportunity, right? So once again, kind of debunking that belief of I'm having to predict the highs and predict the lows is what's going to help you learn to make the correct decisions in the market, right? So the day I want to talk about today is 5/15/2024, right? And basically we broke above all-time high. It was extremely bullish, and we were able to capitalize a move for over 158% on SPX. And I really want to break that down in this lesson, right? But more importantly, I want to break down what led me to change my irrational belief in the past of, oh, it's a supply zone, I must only look for shorts, right? Because that is what this day kind of represented. Pre-market, we were ripping, right? Price was making all-time highs in pre-market, right? And basically, let me break down on a higher time frame what we were looking at. So if I pull up the 4-hour time frame, you're going to see this is what the market looked like in pre-market, right? So the market in pre-market was rallying into 52585, right? This was the previous all-time high on the S&P 500, right? So once again, we're gapping up, right? Now, another irrational belief is all gaps must be filled, right? Yes, there's a high probability that a gap's going to get filled, but that doesn't mean it has to get filled right now, right? That's another market principle, right? And belief that may cause you to make unprofitable trading errors, right? Because if I'm under the impression that the gap must get filled and we're gapping up $5 in pre-market, I'm only going to look for short plays. My eyes are going to frame the sellers, right? And then when I'm super focused on selling, right, I'm going to dismiss or become ignorant to the bullish scenarios that are happening in front of me. And this is what's going to cause you to get chewed up, spit out, and smoked in the market, right? So once again, let's run through the day. Price is ripping towards pre-market high, or I'm sorry, all-time high in pre-market, right? Now I'm going to whip out the 5-minute time frame. So this is what it looks like pre-market, and we open. Now you'll notice here, right off the open, we get tons of buying off this level at 52585. What's this telling me? It's telling me that there's a lot of people that are ready to long the market. They're very excited. We're above all-time highs, right? Okay, price is rallying. And then you'll see we rip up into this pre-market high level, right? Once again, this is an area where there was more supply than demand, causing the price to come down, right? So now a trader can be like, okay, listen, some buyers showed up in the market, and now some sellers have took them over, right? Selling has brought price down below. Hold on, let me 1 second just get rid of the EMA cloud. I don't want to cause confusion here. So there was buyers that showed up at previous all-time high, and now they're selling over here at pre-market high, right? So the old Josh in this scenario would be like, okay, the gap must get filled. This is a very high probability trade. We just closed below opening print. Let's look for a move down, targeting the gap fill, initiating the fake out, right? The fake out above all-time high. Now, that scenario I just ran you through is very common, right? A lot of traders would be like, okay, this is a false breakout. We're rejecting pre-market high, right? And it makes sense to go short here, targeting end of day, which is way down at like 523, right? Completely dismissing the information on the 1 hour time frame that's telling you that this is extremely bullish and you want to trade with buyers, right? Now, I got one indicator, one tool that helps me identify this information. It's the 9D EMA. That's the double exponential moving average. See, any trader in my courses and every trader in my Discord know how much I use the 9D EMA, but more importantly, it's not the indicator which helps me, it's the way I use it. Right? I have studied this indicator back and forth for the last 3 years, but more importantly, what I studied was what a healthy trend looks like and what an unhealthy trend looks like. Right? So a healthy trend is going to be a trend that's hugging the 9D EMA. We don't want gaps, we don't want extensions, right? It's the same principles you would use on a lower time frame, right? And this is why market principles are so important, right? Once again, principles are governing truths that lead you to have a belief about the information you're looking at, right? So on the 1 hour, you're going to notice we get this very large move, right? And now look at the top of this candle right here, right? Just to quickly explain how the 9 works. Look how extended we are from price, right? Up here at 527, we're literally $2 away from the 9D EMA. See how the 9D EMA is at 525, right? So this is not an area I would want to long the market. Why? Because the 9 hasn't caught up. We're very extended from the moving average. See, the moving average is literally what it says, moving average. It's the average price of the commodity at that given time, right? So I don't want to buy when I'm very extended from the moving average, right? Now, okay, Josh, so then, what are you doing with this information? I'm using this information to go, listen, I'm going to wait. I'm going to be patient because I am still bullish. I mean, look at the conditions the market's presenting. We're ripping above all-time high, and we're still above the 9D EMA. See, this is one of my criteria for entering a trade, right? I'm going to enter with the 1 hour 9, right? Obviously, there's some circumstances where that changes, but for any trader that's still learning and still getting comfortable, with the 9D EMA, you're going to want to trade with it, right? I don't want to short into the 1 hour 9, right? I want to trade with the 1 hour 9. And what this does is cause you to be patient, right? Because once again, I'm above the 1 hour 9, so I want to stay bullish, right? But I'm very extended from the 1 hour 9, so I'm going to remain patient. And I'm going to remain bullish until we close below it. Now, with that principle in my mind, with that precept, with that iteration, what that causes me to do is now expect a pullback. So when I see selling over here off pre-market high, right, and then we come down below, once again, the 1 hour 9 was where? Right around 525. I'm going to remain patient. I'm going to let price tell me her story. Now, the 1 hour 9, just for everybody that's interested in using that, is very similar. Hold on. Exponential moving average to the 50 EMA, right? So the 50 EMA and the 1 hour 9D EMA are going to be extremely similar. So now I'm going to make this red. I'm going to make the 50 red, and if I pull up the 50, notice how we're still above the 50. So the way the 50 works, a lot of traders use is if I'm above the 50, I'm going to remain bullish, and if I'm below the 50, I'm going to remain bearish. And I love that methodology because what you're doing is still trading with the overall conditions of the market, which in this case are extremely bullish. All right, so now I'm going to run you guys down on the information we put in the Discord and when we took this trade long, etc. Okay, so let me just make this a little bigger. Okay. All right, so if I go over here into SPY alerts, this was 5:15 right here. Okay. So this is where I post all the alerts in SPY, right? The trades we take. where, I'm sorry, this was SPX. Okay, so you're going to see right here, because I ended up trading this in SPX, but it was literally the same thing. Okay. So right here, right, at 10:15 a.m., I go long here, stop below open print, looking to target 527. Right, so this is what the market looked like. Notice we dropped below open print, which open print and all-time high lined up very similar. Once again, when you get two critical levels that are aligned, right, you must remain observant to what's happening at that level. Any chart pattern, which represents human behavior, you're going to want to be trading with, considering those two levels are right next to each other, right? Because once again, all those levels hold the volume. There's massive amounts of volume there. So large money will show their hand there. How do they show their hand? With a chart pattern, right? So we have open print, we have all-time high, we fell below it, we were holding the 1 hour 9, so I remained, I stayed patient, I wanted to trade with trend, right? Trend is your friend, just like everybody says. So once again, price falls below, comes above, we get that nice little chart pattern right there, right? Nice little inverse head and shoulders, right? We get that low, now we're getting a higher low, right? We're holding the EMA cloud. This is all my criteria, right? And you're gonna see we ended up taking the market long. We start to get nice pushes here, right? Looking to add into this position. If the opportunity presents itself, we're locking in some profits. And then look at that beautiful push we get off the EMA cloud, right? Once again, the EMA cloud is phenomenal, right? That's the 9 EMA, that's the 20 EMA. Anybody that wants access to the EMA cloud, drop a comment below. I will post it in the comments below, right? The indicator is phenomenal. And then price literally just starts to rally. I mean, check this out. We start really getting nice pushes. And notice the 9D EMA, right? So once again, we have the 9D EMA. We're on the 5 minute. Now I'm going to pull that EMA cloud back up so I could really give you guys an idea of how we were able to capture, what was it we made on this trade? $1,150 for 151% on SPX, right? So once again, let's pull up this EMA cloud. And selected. Get rid of that 50. And just knock these out real quick, these little parameters. Okay. And you can also notice here we weren't really able to hold below the 20 EMA, right? Once again, the 1 hour 9D EMA is holding. I want to trade with the 1 hour 9, right? We get this beautiful push. We get this nice chart pattern. And notice the relationship. This is the most important part, guys. Notice the relationship right here with price in the 9D EMA. This is what I call healthy, right? So one of my criteria for staying in trades is having a healthy relationship between price and the 9. This is what it looks like. Notice right here, right? Notice when price sells off. Look how extended we are. Once again, look how extended we are from the 9D EMA, right? When price drops all the way down to 52525, right? We are literally almost $1 away from the 9. This is not an area I want to enter. Why? Because anytime you're extended, there's a very high probability of a pullback. The further extended you are, the more chaotic the price action is. I don't want to enter when price is chaotic. I want to enter when it's healthy. I want price to be hugging the 9, right? Because when price is hugging the 9, look at the rally you get. So once again, guys, learn to understand when price is healthy, when price is unhealthy. Learn to trade with the 1 hour 9. Learn to trade with the true conditions of the market, right? And not be ignorant to who's really in control. I hope you guys enjoyed this lesson. Listen, I'm going to drop the links below in the comment. Anyone wants to get involved with the Discord, click the links. Once again, we got Trader Bootcamp, Market Philosophy, online courses. Purchase of these courses results in lifetime access to the team. I'll see you there.